All right, let's get right into it. The price of gold has been on a crazy run, smashing record after record. So what's going on? What's really behind this huge surge? And what is it telling us about, the entire global economy? Today, we're going to break down all the forces behind gold's big moment.
But first, let me ask you a question that brings this whole thing right down to your wallet. Do you ever feel like you're doing everything right, you're saving your money, but you're still somehow losing ground? Well, that feeling, it's not just in your head. It's actually a huge part of this story.
Because the answer to that feeling connects your own bank account to what global superpowers are doing on the world stage. And it all goes back to this giant financial experiment that's been running for about 50 years. An experiment that, according to our source material, is really starting to show some cracks.
So let's start right there, with the problem hiding inside your savings account. Honestly, it's the easiest way to see the pressure that's building up in the system. Okay, so this slide shows you this simple, kind of painful math that's at the core of the issue. You might be getting, say, a 4% return on your savings. That feels pretty good, right? But look at the other side of the scale. Inflation is running at 7%. That gap means that every single day, your money is actually buying less and less. There's actually a fancy economic term for this, a negative real interest rate. It sounds complicated, but it's just what we saw. It means the cash you're holding is a losing game. Inflation is literally eating away at the value of your savings faster than it can grow. So yeah, in a very real way, you are being punished for saving.
So what's fueling this inflation? What's the engine driving this whole thing that's making your savings worth less? Let's take a look under the hood.
This number, it's just wild. The source material says the Federal Reserve is creating $40 billion of new money every single month. Now, this isn't tax money. It's created out of thin air, electronically, through a process they call quantitative easing, or QE. So, how does that even work?
Well, here's a quick breakdown. First, the central bank just creates new money with a few keyboard strokes. Then, step 2, that new money gets injected into the financial system. And the result? You get to step 3. You suddenly have way more dollars chasing the exact same amount of stuff. This was meant to help the economy after the 2008 crisis, but the side effect is pretty obvious. Prices for everything, stocks, houses, and yes, gold get pushed way, way up.
Okay, but this isn't just a local problem. The shockwaves from all this money printing are being felt all over the world, and other countries are paying very close attention, and that's sparking a global rush to gold.
Now, the source material really doesn't pull any punches on this. It basically describes the dollar system as an unfair deal, not just for regular people, but for other countries too. The idea is they're asked to trade their real stuff, their oil, their goods, their labor, for dollars that can just be printed on demand. And a lot of countries are starting to get tired of that deal.
And you can see this huge change in behavior right on this timeline. Before 2008, central banks were actually selling off their gold. But after the financial crisis, when the money printers went into overdrive, they did a complete 180. They became huge buyers of gold and have been every single year since. And then 2022 happened. Over $200 billion in Russian assets were frozen. That was the trigger that put this whole trend into hyperdrive.
I mean, this really gets to the heart of it, right? If you're a country and you see that another nation's entire savings can be frozen, just like that, overnight, why would you keep your savings in that same currency? That single event sent a massive shockwave through the world, and it made a lot of countries scramble for an alternative that no one could control. An alternative like gold.
Now, as much as this feels like a totally new and crazy crisis, the source argues it's anything but. In fact, it's a pattern we've seen again and again throughout history.
To get a sense of the potential we're talking about, just look at the last big bull market for gold back in the 2000s. The price shot up over 660%. That's a 7.6x move. These cycles can be absolutely explosive, and the argument is that we're just at the beginning of a brand new one.
History is just littered with examples of fiat currencies. That's money backed by nothing but a government promise, eventually collapsing because they just printed too much of it. From ancient Rome to Weimar Germany, and more recently in places like Venezuela and Zimbabwe, it's the same story over and over.
And this is maybe the most important point from the source. They're saying this isn't just another normal cycle. It's a potential super cycle. See, in the past, when inflation got out of control, central banks could just hike interest rates to cool things down. But with the mountain of debt we have today, if they raise rates too high, the whole system could break. They're kind of trapped.
So let's pull all these threads together and see what the source thinks this all means for the future of money itself.
This table sums it all up, really. You go down the checklist of all the big drivers. Are central banks going to keep printing money? The source says yes. Are countries going to keep trading their dollars for gold? Yes. Is the world getting more tense and uncertain, making gold look more attractive? Yes. You see the pattern here? All arrows are pointing in the same direction.
So what's the big takeaway from all of this? Well, the source argues a few key things. One, that the whole global system of fiat money we've had since the 70s is basically a failing experiment. Two, this isn't going to be a sudden crash, but more of a slow, grinding decay that's already happening. Three, you'll still use dollars and euros to buy our groceries, but four, and this is the big one, your long-term savings will increasingly move out of currencies and into hard assets, like gold.
And that leaves us with one final big question. We've just laid out the case for why the very idea of money and savings might be changing. The argument is that value is going to flow from paper assets to hard assets. So the question isn't just for governments or big banks, it's for you. How will you store your value?